Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing PetMed Express's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a micro-cap company, 150 million market cap. They're trading at $7.12 a share, and they have 21 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They do have positive free cash flow each year. It was a lot stronger in 2020 and 2021, cut in half into 2022. And then it's been steady after that, 17 million in trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was positive in 2020, 2021, and 2022. They did have a negative in the trailing 12 months. Since they had positive free cash flow, it was probably lots of non-cash items on the income statement, like an asset impairment, like a goodwill impairment. Revenue is the sales for the company, and that's pretty steady, around $300 million a year. It goes to show you don't need $100 billion in revenue to be profitable. You can do it with under 300 million. We estimated 4 years of future free cash flows. We also estimated the terminal value of all cash flows past year 4, that's 326 million. We discounted the numbers back to today using a weighted average cost of capital. We get a value of the company of $300 million. We divide that by 21 million shares. And we get a calculated stock price of $13.84. They're trading at $7.12, so they're trading at a 49% discount. It's a really strong buy according to the model. I think their future free cash flow growth is pretty conservative. It's a lot less in 2020 and 2021, in line with the current number. And I also gave them a higher whack. It should have been 8%, I gave them 9%. So it still seems pretty undervalued, even though I try to be ultra conservative with this model. There are 9 companies in the same industry as PetMed, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend much in CapEx, only $5 million a year. It looks like they're debt-free. They used to pay a really big dividend, but they recently suspended it. They generate the most free cash flow out of all these companies. Walgreens is negative $500 million. They rank second in market cap out of the 9 companies. If you take the bottom 8 companies and multiply by 10, it's still a lower market cap than Walgreens. Their price to book is 1.4. Price to book is stock price over book value per share. This means investors are paying $1.40 for $1 book value. We can't look at their PE since they have negative earnings. They do have a really good price to free cash flow, 8.7. Under 10 is phenomenal. Price to sales is 0.6, which is worse than the median average. They generate less revenue than High Tide, and their revenue isn't really growing. Their 5-year annual revenue growth rate is negative 1%. They did mention a few months ago that they're suspending the quarterly dividend. This will allow the company to invest in the business in order to grow it. Let's take a look at their most recent 10Q. This is as of 9/30/2023. Their revenue is up from last year. In the third quarter of 2022 it was 65 million. This most recent quarter is 71 million. And for the last 2 quarters, their revenue is 149 million compared to 136 million. So they're finally growing again. Let's see if they provide a breakdown of this revenue. Most of their revenue is from current customers, reorder sales, 62.4 million. New orders, 6.2 million. And then they have membership fees, 2.4 million. You can see they recently added the membership fees. They didn't have any last year. So that's another source of revenue. All the expenses directly tied to generating the 71 million of revenue is 51 million. So gross profit of 20 million. Up from 18 million last year. Their biggest expense is general and administrative, 13 million, advertising 5.5 million, and depreciation 1.7 million. So their expenses are higher than their gross profit, so they have a loss, an operating loss of 440 million. They did receive 570 million of interest income and other income of 250 million. So that gives them total income of 800 million. So that gives them a loss before taxes, but they did have 450 million of taxes, so they have a net loss of 70 million. Last year they had a net gain of 2.6 billion. Their shares outstanding are pretty flat, 20.3 million last year, 20.4 million this year. Let's take a look at their balance sheet. 86 million of current assets, $40 million of current liabilities, so they have a really good current ratio. It's above 2. You definitely want to look at the current ratio for microcap companies, because if they have a current ratio below 1, they might not be able to get through the next year. They have lots of cash, $53 million of cash. Last year was over $100 million. $19 million of inventory, $10 million of prepaid expenses. A prepaid expense is when you make an advance payment for a product or service you're going to receive in the future. $27 million of property and equipment, and $22 million of goodwill. So total assets, $159 million. At the end of the first quarter of 2023, it was $164 million. Their liabilities are $46 million, up from $40 million. Their biggest liability is accounts payable. This is how much money they owe when they buy on credit. So if you take their assets, $159 million, minus their liabilities of $46 million, you get their equity. Assets minus liabilities equals equity. That's $114 million. They raised $22 million from selling their business, selling common stock, and they profited $92 million from running their business. Let's look at their statement of cash flows. This is for the trailing 6 months. So their operating cash flow doesn't look so good. It was negative $215 million. Last year was positive $5.1 million, because it looks like they bought a lot on credit in the past. Then they had to pay for those items, so they had a cash outflow of $5.5 million in accounts payable. And another big cash outflow was prepaid expenses of $3.5 million. Although they had a big cash inflow from inventory, it looks like they sold a lot of product. In their investing section, the big item is the acquisition of PetCareRx. They spent $36 million for that, and they spent $2.1 million of PP&E. They pay $12 million of dividends. They won't have to worry about that in the future, unless of course they bring their dividend back. Here's their stock price since they started trading. They IPO'd around $8, which is pretty close to where they're trading at right now. They almost got to $60 a share in 2018, once again in 2021. But you can see how volatile the stock is. It moves around a lot. For the past 4 years, the stock has been on a major decline. So either the company's going to go bankrupt or the stock price should shoot back up. I'm not sure which way it's going to go. I'm invested in the company, so I really hope it shoots back up. But I am a little concerned. You can see they kept their shares outstanding pretty steady, around 20 to 21 million a year. And their market cap has done pretty poorly. It's at its lowest point at 150 million. Back in 2017, it was 860 million. Then it was cut in half. Then it increased over the next 2 years. And then over the next 3 years, it's been declining. I hope it's like 2018 where it starts increasing again. Let's look at the stock on Simply Wall Street. Its last price, $716, 145 million market cap. Pretty much flat in the past week, down 63% in the past year. The company operates as a pet pharmacy in the U.S. They market prescription and non-prescription pet medications, health products, and other supplies for dogs, cats, and horses. It offers non-prescription medications and supplies such as flea and tick control products, bone and joint care products, vitamins, treats, nutritional products, hygiene products, and supplies, as well as prescription medications including heartworm preventatives, flea and tick preventatives, arthritis, dermatitis, thyroid, diabetes, pain medications, heart and blood pressure, and specialty medications, as well as generic substitutes. They also sell food, beds, crates, stairs, and other pet supplies. It sells its products through its internet website, mobile app, customer support center, and direct mail, which includes brochures and postcards, as well as television advertising under the 1-800-PetMeds, PetCareRx, and PetMeds brands. They were founded in 1996, headquartered in Delray Beach, Florida. Simply Wall Street is really high on this one. They're at $18 a share. They say they're 60% undervalued. 2 analysts priced this stock at $10. They also say it's undervalued. In 2013, their revenue was $227 million. It peaked at $312 million at the end of 2020, and it's down a little since then. So their revenue is pretty flat the past 10 years. It really hasn't grown that much. And the forecast is for their revenue to hit $326 million by 2026. The CEO's salary is $500,000, total compensation $530,000. His tenure as CEO is 2.5 years. In the past 12 months, there's been only insider buying, no selling. That's what you want to see. 62,000 shares have been purchased. 61% of the companies held by institutions, 29% by the general public, 5.5% by hedge funds, and 5% by insiders. Their biggest shareholders are giant BlackRock, 8.6%, then Vanguard, Renaissance. The hedge fund Oaktop Capital Management, they own 2%. Numeric Investors, they're out of Boston, 1.5%. Connors Investor Services, they're out of Pennsylvania, they own 0.8%. Here's a good sign, their employee count is higher than ever. They're up to 302 employees. That's 100 more than last year. The ticker trades on the NASDAQ and Deutsche Börse. So let me know what you think. Give the video a like, subscribe, or comment below if you'd like to get a custom valuation or just support the channel. You can become a member by clicking on the link in the description below. Thanks for watching.